Hi, I am Anna. I come from www.ntvforex.com. Time to look at cyclical and value stocks analysis. http ntvforex.com News ID 7DC4478252020 11:41 7 am. Cyclical or value stocks. There is a common saying when, well, buying anything really a buy low sell high. However, with the Nasdaq and the S&P 500 at all-time highs, we've all been guilty of doing the opposite, buying the tops and selling or ignoring the lows. With the Teslas and the Apples of the world continually beating analysts' estimates, is it time to buy up the beaten-up stocks or, buying low Nasdaq in blue, gold in white, AUD/USD in orange? NBSP cyclical stocks have been lagging behind. If we take a look at gold, the Australian dollar, and tech health stocks, they have all spectacularly rebounded from March. However, most, if not all, of these asset classes are affected by ASPOTA factors, i.e. what is happening today? Gold has rallied on the devaluing of the US dollar alongside its safe haven status. The Australian dollar has rallied on China increasing their commodity imports from Australia, and tech has beaten expectations, has fortress balance sheets, and are generating cash flow even during the pandemic. Therefore, we can argue that their price is currently a high and that we should sell to buy into a lower stocks. By holding these expensive assets at the valuations they are now at, we implicitly take the view that these stocks will continue to relatively outperform cyclical or valuable assets in the future at the margin it currently sits at today. Since we do not know when we can say the coronavirus pandemic is fully behind us, the market either is assuming that the earning outperformance margin will continue into the distant future, or B, only looking in the near future, or C, a little bit of both A and B. Does this mean we should stay away from cyclical stocks forever? Here is how I look at it. NBSP stocks vs Ferrari Lita S. Say you like Ferrari Lita S. Say a dealer offers you the Ferrari you want but can't afford, at a price that you can afford. However, you are only allowed to drive it sometime in the future at a date you don't know. Until then, you are not allowed to sell it. Also, you are only allowed to take the bus, which shaves 4 hours of your day. Chances are, the Ferrari will be worth retail when you are finally allowed to sell it, probably. Will you take the deal? This is similar to what investing in cyclical stocks is today. In the Ferrari example, you lose 4 hours which could have been used productively, on the bet that the value generated from losing 4 hours a day for an unknown amount of days will be less than the enjoyment value you will get, once you are able to realize the value of the car. By investing in cyclical assets such as banks, airlines, etc., your bet is that their gain will outperform the potential further benefits of the Apples and Facebooks of the market. Of course, the analogy only makes sense if you compare Southwest Airlines and JP Morgan as the Ferrari of the cyclical part of the market. It is hard not to get into the hype and not get into the high-flying tech stocks, even if they justify their valuations. However, by ignoring the noise and sticking to your fundamentals, buying low and selling high, you may see some outperformance in the longer term. Warren Buffett did. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.